Hey everyone, and welcome to Realbricks. You're moments away from beginning your fractional real estate investment journey, and there's a couple things you need to know before getting started. First, we're going to cover why real estate investing has been one of the best performing assets in history. Then, I'm going to break down the fractional real estate investment model and how it's changing the entire real estate industry as a whole. We'll then cover what Realbricks is and how it works, and then we'll dive into all the benefits that you're going to get investing with Realbricks and why this is one of the most unique investment opportunities in the last 10 years. And of course, I'll show you the potential returns that you can expect, and then we'll wrap it up by showing you how to best get started. By the end of this video, you'll have everything that you need to know to start your real estate investment journey. Okay, let's get started. So why invest in real estate? You see, for the last half century, real estate has been one of the most reliable and proven investments. In fact, many of the world's ultra-rich allocate a significant portion of their net worth to real estate, nearly 1/3 of their portfolio. Real estate is unique due to the potential for two income streams investors can capitalize on. The first is rental income. When you invest in a property and rent it out, you can start seeing immediate cash flow from the rental payments. The second stream of income is your property value appreciation. So, as your property increases in value over time, so does your investment. Let's take a look at this chart showing the average home value in the US over the last 50 years. Home values have soared in the past decade and continue to rise, making real estate a powerful tool for long-term wealth building. Real estate also provides diversification for your portfolio, balancing other investments like stocks, ETFs, and crypto. A well-diversified portfolio helps reduce risks when the markets fluctuate. So, why real estate? Because you have the opportunity for dual income streams, long-term wealth building potential, you're owning a physical asset, and you can diversify. Real estate investing is one of the smartest ways to grow your wealth. Now, a lot of you probably already knew this and have wanted to get into the real estate market, but you didn't have the upfront capital required to purchase your own investment property. This is where Realbricks and the fractional real estate investment model becomes a complete game changer. The old way to invest in real estate is complicated, time-consuming, expensive, and outdated. Let's look at the process. You start by researching properties and hope you find a decent deal. You then have to find a lender. You have to tour the homes. Then you make an offer, and then you hope the offer gets accepted. Pay the down payment and the closing costs, secure your insurance, and then you finally get the keys to your investment property. But then it's on to the renovations, the repairs, listing the home, showing the home, vetting the renters, signing the lease, and then deal with all of the property management, accounting, and taxes. Guys, this old way is broken. Now, the new way thousands of investors are turning to is with fractional real estate investing with platforms like Realbricks. By harnessing the power of fractional real estate, Realbricks allows investors to own a piece of the property without having to buy the entire property themselves. Each investor essentially purchases a fraction or a share of the property, which gives them ownership rights and a proportionate share of any rental income or appreciation. This type of investing lowers the barrier to entry, making it way more affordable to invest in real estate because investors can now invest much smaller amounts to capitalize on the returns. The old way, 17 long steps. Fractional real estate, 3 simple steps. It's as easy as browsing our marketplace for properties, buying shares of that property, and then earning rental income and property appreciation from your investment directly in your Realbricks account. Realbricks takes care of everything else. We handle every aspect of the real estate investment process so you don't have to. All of those 17 steps that we talked about earlier, from vetting and purchasing the properties, sourcing and managing the tenants, handling all the property management and repairs, as well as taking care of the taxes, the paperwork, and the accounting, we do it all so you don't have to, which is why we have thousands of investors flocking to our platform. Now, how does Realbricks find the properties and ensure that they're good investments? You see, we've assembled one of the best real estate teams in the world with a combined 100 years experience and hundreds of millions of dollars of transactional real estate managed from our own leadership team. We follow a rigorous market and property vetting process to ensure we're offering our investors the best possible returns. We evaluate each investment based on 6 key factors that provide strong potential for returns, but also long-term stability. So let's look at the criteria. The first thing we look at is historic market performance, which is basically how has this market reacted to changes in the last 10 to 20 years. We're basically looking for markets that have stable property value growth that have both weathered downturns and capitalized on the upturns as well. The second factor that we look at is economic health. We look for markets with a growing local economy and a stable workforce to gauge long-term stability and fueling housing market growth. Next, we look at the market demographics. Basically, we're looking for markets that have a growing population, low eviction rates, and low unemployment rates to make sure that there's a steady stream of renters, they stay in leases, and they can afford their rents. Next, we do a rental market analysis. We're looking for areas with high rental occupancy rates, what the average rental price is, and low vacancy rates to ensure the rental properties don't sit idle without cash flow. Next, we conduct a property analysis. We're looking at things like location, neighborhoods, demographics. Are they close to schools and city centers? We look at what the projected rental income yields are and the potential renovation costs. And last but not least, we look at property rights. You see, we invest in areas that have favorable property rights such as landlord laws, eviction rights, or basically regulations that allow us to take action on delinquent tenants should we need to do so. We use this rigorous criteria for every single market and property that we purchase to give our investors the strongest potential for growth and stability. Now, once you get in our marketplace and check out all the investment properties we have available, you'll notice 6 of our investment properties are in Omaha, Nebraska. Omaha was chosen as the launch market for Realbricks due to its impressive growth, and it well surpassed our 6-step vetting process. So here's what makes Omaha so attractive. Omaha's median home price is $278,000, which is showing a 5.3% year-over-year property value increase. They also have a low unemployment rate. It's currently under 3% and indicates a healthy job market. We also looked at the economy, and it's got stable growth in the key sectors that you look for in finance, healthcare, and technology. We also found homes in Omaha sell quickly. Homes sell within an average of 12 days, which reflects strong market demand. Omaha also has a 95% occupancy rate, which ensures a stable and dependable rental market, meaning people stay in their leases and they stay paying rent. And last but most importantly, Omaha's homes are appreciating in value. Annual appreciation rates are between 4.5 and 6.5% since 2009 and continue to climb. Now, let's talk about the types of returns you can expect when investing with Realbricks. At the moment, all of our properties are projected to return either 5 or 6% APY in rental income dividends. For example, if you invested $10,000 into a property, your rental income would be $600 a year. Realbricks pays rental dividends quarterly, which means in this scenario, you'd be taking home $150 per dividend. You can either cash out your dividends into your bank account, or you can reinvest them back into the property of your choice. Now, the other way to earn income with your investment is through appreciation. Let's use the same example of a $10,000 investment into a property. All of our shares start at $10, which in this scenario would equate to you owning 1,000 shares. Now, if you were to hold on to your investment for 3 years, and let's say the property you invested in appreciated by 12% during that time, you can capitalize on that appreciation by selling your shares on the secondary marketplace for 12% more than what you bought them for. You purchased your shares at $10 a share. You can now list them on our marketplace at $11.20, which would net you $1,200 in appreciation, all while you've been earning rental income while the property appreciates. In this scenario, your return on investment would be 30% over the 3 years that you held your investment. As you can see, the home value appreciation can really bolster your returns. And just for reference, the Templeton, which is a property we purchased 9 months ago, has already appreciated 12.5% in value. Again, we feel very bullish about our investments and have already seen our investments grow in a short period of time. Okay, so now that we've talked about the returns, let's recap some of the major benefits you get when investing with Realbricks. Realbricks has a low minimum investment amount, starting at just $100. See, our mission is to make fractional real estate accessible to everyone. So whether you have $100, $10,000, $100,000, it doesn't matter. We're giving you the flexibility to invest according to your budget. Realbricks also offers the ability for passive income streams. Because you receive quarterly dividends from rental income and you can participate in the property value appreciation, you can kick back and relax as your investments grow. Realbricks has also taken the complexity and the hassle out of real estate investing. Again, like we mentioned before, you don't have to worry about any of those 17 steps that we talked about. Realbricks handles it all and makes sure that your investing experience is as smooth and hassle-free as possible. Plus, you can feel confident in your investment knowing that Realbricks does its due diligence, highly vetting each property that we make available on our marketplace. Our 6-step criteria are carefully considered to help maximize the returns for you. You also have the ability to exit your investments, which has been really challenging in the real estate industry before Realbricks. You see, Realbricks offers the first ever fractional real estate secondary market, making it simple for investors to buy and sell shares with ease. Again, this provides liquidity and a true exit strategy, solving the problem of being locked into long-term investments. And last but not least, our industry-leading mobile app makes it easy for investors to manage their portfolio anytime, anywhere. The app is super simple to use and provides all the functionality of the desktop platform in a convenient, mobile-friendly format. So if you haven't already, download our app from the Apple Store or the Google Play Store and see just how easy it is to manage your portfolio right from your phone. So if you're ready to start earning rental income, appreciation, and building a real estate portfolio that you've always dreamed about, simply create a Realbricks account and in less than 5 minutes, you'll be ready to invest. Since day one, our mission has been to democratize real estate investing for everyone. We built this platform with you in mind to start a completely new era of real estate investing without the complexities of having to do it yourself. Cheers, happy investing, and my last question to you before we leave is, if you have $100, what are you waiting for? Let's get started building your fractional real estate portfolio right now.